In a world full of noise and uncertainty, IG is the investment platform that backs you. Forget the dubious tips from that guy down the pub. Get real-time insights, analysis and tools. No more fat cat brokers clawing your gains. Pay zero commission on your investments. Switch to a platform trusted by investors for over 50 years. IG. Trade, invest, progress.
Hello, how are we doing? Welcome to the Rich and Piers Show. It's Straight Live with IG. How are you all doing? Apologies, we didn't make it yesterday, but we thought, you know what? It's better to give you our big Federal Reserve rate decision review tomorrow. So we are here today and tomorrow, 1 p.m. till 2 p.m. And we've got a new producer. That's right. No, don't worry. Phil hasn't been sacked. Producer Phil will still be here. We have a senior producer. Welcome Layla to the company. She just came in and met Piers. And Piers said, where are you from? She said, New York. And he went on to tell her how his family lives in the Hamptons. That was it. That was your welcome.
You love telling that joke. You love going on about that. It's really...
The Hamptons.
Oh dear.
How are you, darling? I've missed you.
I'm good, man. I'm good. I'm getting excited about getting into this very complex, rather painful day.
We've got, I tell you what, it was a great morning and things just took a turn. Now, there's a reason the oil market that we'll get onto shortly. However, look at these PPI numbers.
Well, I think gold is the most interesting thing to talk about today, right? I mean, this is one of the most crowded consensus longs you could come across. And there's a few nuances to this because no inflation, no gold ain't working today because that real inflation rate is moving in the wrong direction.
So mainly the PPI headline rate, so that's including energy and food, 0.7 versus 0.3 expected, right? 0.5 last month, 0.3 expected this month, 0.7. The core, 0.5 as well. So look, there's nothing really that you can pin down in the numbers as to why it's so high. It's not just shelter or, not just energy costs. It is overall just pressure in the system.
Yeah, I mean, listen, PPI is not something that we usually pay too much attention to, but when there's a miss of that magnitude, it's definitely something to pay attention to, especially in the very sensitive environment we are in right now. In this, and this is the wheelhouse of the sensitivity, right? We'll find out more in the coming weeks on, the big numbers, the CPIs and the core inflations that the Fed's going to be talking about. But we're going to hear from the Fed tonight.
For people that are kind of new to investing, or at least new to fundamentals, tell us the difference between PPI and CPI.
Well, PPI is the cost to the input cost to, say, manufacturers, how much they're paying for goods and services into their cost of goods sold. So it's the prices on the way in. And
so
the
you
prices,
get that earlier.
Exactly. So the prices on the way out, in other words, what the consumer or the end market pays for it, that's where you get the CPI number, and then that gets broken down into and categorized into the most important components of that being housing, shelter, of course, and wages, which feeds directly into that being the core inflation number that the Fed are laser focused on.
So we had that come out at 12:30. Just before that, Matt Parkins in the chat has got it. A tax on oil infrastructure. That's right. Good afternoon. I was going to say good morning. Good afternoon to you all in the chat there. Feel free to drop any questions in and comments, but we are going straight on to that. As Mark Parkins says, there's been a tax on oil infrastructure, hasn't there? That's taken the oil price from 93.5 to 97.5.
Yeah, I mean, there's a pretty significant ceiling on oil at the moment, around, I mean, certainly at 100. But you cannot. I mean, what the headlines we've seen in the last hour since you and I have been preparing for this show are exactly why you must remain very objective, very nimble, ready to move quickly, because this market is that market, right? If we just for argument's sake see some form of significant change in the news flow in the next 20 minutes, mark my words, the market will fly.
Yeah.
So the market wants to fly. I mean, the Russell Index is the greatest indication of where the market wants to be, right? It's full of all the economically sensitive stuff, the stuff that's exposed to leverage balance sheets and interest rates. And, it's still, even though with all this pressure, it's still only just knocking about. I mean, that chart's not particularly, that's like a one-day chart.
No, yeah, exactly, the one-day chart. And that shows you exactly the negative correlation at the moment that's going on between the oil price and equities, right? As Piers says, you'll see it most in the Russell 2000, you'll see it most in the DAX. And what we're seeing is just a perfectly opposite reaction to asset prices and the oil price, right? There's nothing more to it than that.
No, that's exactly right. I mean, there's nothing complicated about it. And the Russell Index is the greatest. It's literally one for one trading with oil, right? But the thing is it's very easy to, my base case is that this doesn't last for months, but we're still in the weeks scenario, right? I mean, Trump said 6 weeks. Okay, I mean, apparently, I didn't actually hear him say that, but apparently he said 6 weeks.
You know what? I've got a chart for that.
So
my good friend Andrew Hart, who I think you know as well. Now Hart has been in the market for longer than I have. He must be pushing on 30 years now. He was at Merrill Lynch for a while during the crisis, but he has put together a Claude analysis of week by week as we go through. If the Strait of Hormuz stays closed, right, which by all reports you can see that it absolutely is at the moment, you can see how different elements develop, right? The gas price in the US, the Brent crude price, right? That's not WTI, it's Brent crude, so take $5 off. But you can see this week we potentially get up to 108. The S&P down 4% from the highs. But next week gets really interesting. If the Strait is still closed next week, Claude would predict that the cost of rerouting ships and rerouting oil and the lack of supply takes Brent crude up to 124. So we're talking 115 to 120 for WTI. And the S&P down 9% from the high, so down another 5 from here.
From the highs, okay. Well, yeah, it's quite aggressive, but again, it's that's, I think, Claude probably taking in, and this is where AI separates from humans in terms of having a feel for the market, because Claude will be working on the data alone. And on some of the estimates that are being brought down, this is a great example of a robot. Which, by the way, many of these multi-strat hedge fund managers, they act like robots. This is exactly what they're doing.
That is their personality.
That is what they do, though. They literally have robots doing this for them, and then they just press the button.
Are you saying some portfolio managers might not have feelings, that they might?
Well, I'm saying their feelings are taken away from them due to the rules that they have to live by these days. I mean,
all right. So we're not talking American Psycho kind of thing.
No, not at all. I mean, well, no, not really. I mean, just a good example, the greatest example in recent times was in April last year when Trump did the tariffs, right? And the stock market was down. Let's say it was down 15%. Or maybe 17%, the S&P from the high in like 10 days or something. Yeah. And the people I'm speaking to at these multi-strat funds, they are literally having to sell those lows because of risk management. The robot tells them, so they press the button. Even though if you used your human brain, you might have been able to figure out that that was a terrible time to be selling the market, but that doesn't matter. So no, that's the way the markets are managed these days in a very robotic fashion. That's why we have to be careful, because at the moment, it's probably a combination between humans and robots trying to buy this dip a little bit. But then if the robots decide to sell, then we're going to have a big gap down.
I've just been with the two gents that I do the Art of Investing with. We recorded yesterday, and they're both bullish. They're both, CJ in particular is looking at the NASDAQ chart, and he is saying this wants to go higher.
Yeah.
And it's something I felt as well. I put some money to work in my ISA on Monday.
Terrifying when you were telling me you want to go along the NASDAQ. I'm just like,
I bought Russell 2000. I bought S&P.
I know.
On Monday, you could just feel everybody wanted to believe that this was coming to an end.
Yep. Well, even this morning.
Hope, or is there something?
Well, no, I don't think it is just hope. I think there's a lot of rationality to it, right? Let's just look at the last 50 years of flare-ups in the Middle East. First and foremost, there's no economy at all in the Middle East that even has a scratch on the global pie. The only thing that matters is oil prices, right? Which are a critical lifeblood, a critical input cost to so many different things in this world. It is just binary. It does not matter whether they, from a market perspective, if they blew up every single thing in Iran and its neighboring countries, the market wouldn't care less if oil was at 60.
Yeah.
If you blew up a country with a GDP that contributed to the pie. So it is just about oil. It's very simple. And historically, these flare-ups have been short-lived, especially in Iran. I think Iran have surprised everyone, no one more than me, in terms of how they've retaliated, where they've retaliated.
Well, they saw the weak point, didn't they? They probably couldn't believe that Trump didn't plan for the Strait of Hormuz.
Well, I don't think anyone took it seriously that they could shut it down or restrict it for as much time as they have.
Yeah.
But again, it's difficult to know exactly what's going on the ground, because the media, 70% of the media are reporting whatever they can to make Trump look like an idiot. Mm-hmm. Iran are going to tell us whatever, right? Don't believe a word that come out of them. So who are we believing about what's actually happening? Have you got photographs?
No.
I don't. Trump says that. I don't know. All I know is that we just have to remain very nimble. But I still, at this point, right now, still do not take the view that we are going to be in this situation in let's call it 4 weeks from now, max. I mean, I have moved those goalposts, by the way, and I'm the first one to put my hand up and say that this has gone on and become much more complicated than I expected it to be with regard to that strait. Yeah. No question about that.
I heard a very intelligent point of view that I want to believe. I don't like to believe it can be a random and almost like America's playing computer games, right? The idea was that if the US get in and manage control the Strait of Hormuz, or at least have a much larger say in what goes through there, that really puts pressure on China.
Well, this is the point.
Should they want to invade Taiwan?
100%.
So that was number 2 objective. Number 1 objective was obviously denuclearization of the area. Number 2 objective, to put pressure on China's energy capacity. Number 3, de-dollarization. And you put the end to de-dollarization if you force China to buy in dollars again rather than in yuan.
Listen. If you ask me, and I don't want to get into politics, but I couldn't agree. If you look at what's going on here, if you take all the bias and all the crap out of it, and you look at it from a strategic 36,000-foot view down on the world, there are 2 choke points. There are 2 vulnerabilities for the only threat to America: China, Venezuela, and the Strait of Hormuz. Oil. The only 2. They've been buying cheap oil off both their mates through those channels.
And stockpiling.
Correct. If you choke those both off, you have a significant advantage over the only competitor you have in the world. Strategically, it is genius. It's very, very. You raise the temperature so high that you strategically force your only major threat into a vulnerable situation. Listen. That to me, it is just.
So because that is so smart. Right, and you would hope that the smartest minds in America are at the decision.
There's some smart people involved in this, for sure.
Then how does that tie in with it being over in a few weeks?
Well, that's I think a slightly it's a linked but separate question. I think that I have no idea whether or not the military operation is surprised or in line, or what they actually expected going into this versus what's actually happened. But I think that there's anyone that thinks this is going to be a taco event it's not happening, right? We've gone past that point now. And plus, this is a very, very punchy move that's going on right now. And if they pull this off, they have a significant advantage with the Chinese against the Chinese, and the de-dollarization that you just pointed out. Listen, it's macro games of the highest order, but it's really, really interesting. I find it fascinating, and I try and remove all emotion from it and try and look at it from what it is. It's causing us mayhem in the markets, although there's some interesting trading opportunities, but it's becoming more, the longer it goes on, the more difficult it is to actually trade the market, because it becomes highly, highly unpredictable.
And the unpredictability and the volatility you can see from this chart here. It's the Bloomberg vessel tracking. And look at that, the crossings through Hormuz. And you can see we've had 1 on the 17th of March. Isn't that a great chart? You can really see what the...
It's a great chart, that one. What's that? Is that a Bloomberg chart?
It is a Bloomberg chart. Right. One big topic that we haven't mentioned yet, of course, it's the Federal Reserve rate decision tonight. So let's look at the setup we have for this evening. This is from our good friend Aaron Sawyer, also a past colleague of mine at Credit Suisse. So the base case for tonight is that, of course, the Fed is expected to leave rates unchanged, 3.5 to 3.75%. Market does not price a cut in before Q4 now, right? So you're looking towards October before we get a cut. Tonight, of course, we get the SERP as well, the projections of where the voters see things going forward. Will that be different from the market? The market now pricing in 1 cut this year. Will the SERP be pricing in 1 cut, or will it be pricing in no cuts at all? It's going to be a really tricky one because, of course, we've had a very different labour market since the last time we heard from the Fed.
Again, I've got 2 comments on this. Number 1 is, my thoughts on the futures markets for interest rates. If we get a headline that there's a de-escalation in 30 seconds' time, that will completely turn on its head. So as far as I'm concerned, you may as well look at the price of oil if you want to look at that. Number 2 is, in terms of the non-farm payrolls, I think this is one of the most fascinating situations. If I'd said to you, especially you, 2 months ago that we'd get two significantly negative labour market prints, and oil was at 100, and we were in a very
6,200.
What would you say that the S&P was going to be at?
6,200.
Yeah, where were we at that point? So yeah. So anyway, long story short, the market is looking through a lot of stuff, and there is a lot of nuance to the labour market right now. Right, you've got productivity going through the roof, GDP up here, and GDP growth diverging from the labour market growth, which is the first time in history that's ever happened.
Yep.
This is economic models just being thrown out, which is fascinating. And obviously, you can argue, exactly how that's happening, but it's hard to argue that AI isn't playing a role in that. But the question is, where are we going with that?
Yeah.
And what's that doing to the consumer?
Well, the committee is going to be very split tonight, isn't it, between the consumer and the CPI, right? The ones that are focused on inflation could be, as Frosty says there, could even be starting to think, right, are we going to have to increase rates in the future? And then those that are looking at that labour market and the negative 92,000 non-farm. So the playbook's definitely to hold or to cut later, right? So the cuts are being pushed out. Morgan Stanley pushed out their estimates today. But nobody's talking about increases, are they? Not in the US, maybe here.
Yeah, I don't think that anyone's talking about it, but I think the bond market is definitely thinking about it, and I really feel sorry for the Fed tonight.
You feel sorry for them?
No, I don't feel sorry for them, but I wouldn't want to be in that press conference for Jay Powell. I mean, so hang on, we've got our new man tonight? I can't even... No, he's not new. So Jay Powell, he's on his way out, so he's going to be even more...
This is the penultimate.
Yeah, so penultimate meeting and press conference for Jay Powell. You'll always hear me banging on about it. The actual statement itself is 9 times out of 10 pretty boring. What I really want to hear is what he says in the press conference, and he's loosening up a little bit because he knows he's on his way out. He's a very professional guy, so he's not going to do anything silly, but he's going to be grilled over and over and over again by the reporters tonight as to what he thinks about what has his mindset changed as a result of what's going on. He's going to have to answer that question, and he has to be very careful how he answers it. And that's why I say I don't feel for him tonight, because the market is so emotional on what he says in that press conference.
I think what helps him every 3 months is having the projections. So let's have a look at the forecast projections. Core inflation to go up 0.2 to 2.7. Headline inflation up 0.6 to 3%. That's the real change thanks to oil. GDP growth lower. So higher inflation, lower GDP. I think that's got a name, doesn't it?
Yeah, well, the stagflation story is front and center, isn't it?
And then unemployment up as well to 4.6%. So we were in absolute Goldilocks 3 months ago when we had the last dot plot. But as Piers says, the market's at the same level now as it was 3 months ago. So
the problem is the market has been, the structure of the market and the psychology of the market has changed so dramatically that it's actually unrecognizable from what it was when you and I started doing markets. Not only is there a Fed put under everything, the problem is with the Fed put, though, is that the one moment when that does not count is when you have an inflation problem. Of course, right? Because inflation takes away all of the power of the Fed to put in place QE measures, buy bonds, and throw money at the problem, right? But so we all watch inflation like a hawk. That is all that matters. That's literally all that ever matters, quite frankly. If you wanted to boil it down to one word, it's always inflation.
not unemployment?
Well, listen, if you put a gun to my head and ask what's the number one most important singular word in the world, I would say inflation.
Yeah, I guess, because you can fight unemployment if you don't have inflation.
That's my point. If you have an inflation problem, it's cancer, and it takes away all of the power of the central bank to help the labour market. So yes, my answer would be inflation.
Sparkle's asking in the chat, thoughts on agriculture? Are we seeing any movement?
Crikey.
Agriculture? It's a bit left field for us, isn't it?
I mean, yeah, it's a little bit left field. I mean, I've notably seen there's been a lot of moves in the fertiliser market, of course, over the last, there's lots which have mild implications, of course, to the petroleum world. But it's the agriculture, urea, fertiliser, this whole space is. I took it off my screen a long time ago. It's just too hard. There's no growth. There's loads of political headlines. There's loads of countries in the eastern. I don't want to say the Eastern Bloc. Can we even say the Eastern Bloc anymore? to Eastern Europe, who have control over the supply. There's loads of political games that go on. It's just a minefield. So I'm a bit of a no comment.
It does remind me though. I am on a second half Lent.
Yeah.
So Lent's too long for me. I fully hands up, can't manage that. But I'm on no alcohol, no caffeine, no red meat.
Okay, you actually look like you've got a bit of a glow about you. That and the tanning creams
just
you've
the
been
lights.
using. You do look healthy today, actually.
So yeah, 20 days of no alcohol, no caffeine, no red meat.
I quite like that. I might join you on that.
I'm on day 5. I mean, let's not.
I'm actually on day 5 of exactly that, but not on purpose. So I might push through and continue that little thing.
Let's do it. Should we have a challenge?
Yeah, I like that actually. I'm on it right now. Well, so hang on, was there no red meat as well? Okay, that's fine. Done.
Talking about challenges, do we have Maturin on?
Oh yeah.
You can guess what I'm going to speak
Yeah,
about.
Oracle. He won that challenge. What 156 was the number, and we got 154.50. So, congratulations to Maturin. He won the Oracle bet, the trading bet.
The question of is this thing still in a downtrend?
Well, I mean, it depends where you want to move that channel.
Yeah, that channel's wrong.
But it's
Dunno.
listen. There's a lot. Some of the pullback from the highs is market related, and some of it's just the ongoing pressure that we keep seeing in big tech, regardless of whether it's software or semiconductors. And I'm not including memory in that, because memory are currently living in their own universe. I wouldn't mind talking about memory, by the way, at some point soon, perhaps before we open.
I'll try and remember that.
Hey, there he is.
But yeah, talk us through how we managed to
Should we
trade
talk
up.
about Oracle? I mean, listen, it's
We got up to 168 on numbers, and then
it's not about numbers in this market. It's not. It's about positioning and rotations and nervousness. And I mean, Nvidia is a similar situation, albeit very different, because the market is now questioning how long they can keep this growth rate up for, and it's very crowded. So actually, it's a very different story to Oracle, but it's very similar in one regard, which can be applied to so many of these big tech companies, even when they're rallying.
Yeah.
Even when they've got good numbers, they are then the rallies are being sold, and it's quite bearish price action.
It's very bearish, isn't it? But is it specifically in the AI names?
It's not just this stock. It's pretty much everything I look at. It's rally on the open and fade. It's the opposite to a bull market. Bull market is sell off on the open and rally. That's
true.
That's 90% of the price action in a bull market is volatility on the open, grind higher into the close.
Yeah.
Where rip on the and then do the opposite. And that's happened 5 days in a row now. Multiple stocks, multiple sectors. So it is not very bullish price action. The market's trying to rally, so you've got to be really careful, right, about you getting too bearish. And there's lots of people ready to pull the trigger.
It's going to be a really interesting open today. So we've got 6 minutes until you get the live open here on Trade Live with IG. Join us then. We're going to take a quick 2-minute break, and we will reload and be ready to go.
In a world full of noise and uncertainty, IG is the investment platform that backs you. Forget the dubious tips from that guy down the pub. Get real-time insights, analysis and tools. No more fat cat brokers clawing your gains. Pay zero commission on your investments. Switch to a platform trusted by investors for over 50 years. IG. Trade, invest, progress.
This is fantastic. The ignorant Australian has made a little bit. You haven't made friends with Martov there.
Sorry, Martov. It's a slip of the tongue. I mean, I grew up in an era when that's actually what it was actually called. But
Central Europe.
I didn't mean to offend anyone calling it Eastern Bloc. I love Eastern Europe, by the way. But I was merely referring to that part of the world which has a lot of control over fertilizer.
Most definitely.
Namely,
so what was the company? Belarus
or what's they called?
Belaruskali.
Belaruskali, that's the one.
Yeah.
Exactly. Yeah.
Belaruskali. So yeah. Excuse me. Right.
So should we just quick?
I'm trying to remember what I had to.
You want to talk about memory and crack that joke. So, I mean, listen, memory's got to be spoken about because it's pretty much the only sector or space. There's 4 stocks in particular in the world. 2 are in Korea, 2 are in the US. And there's other ones, but let's just boil it down to Micron, SanDisk, SK Hynix, and Samsung. These companies are making all-time highs. The Korean ones actually had a massive sell-off as that leverage blew up the other day, but they've ripped back. New all-time high Micron, new all-time SanDisk. Micron's numbers are tonight. I'll talk about that in 1 second.
Right.
But the point being is that there's no stock pretty much in the whole world that has such bullish price action. A lot of it is gamma squeezy, of course, because there's a lot of short-term options involved in these stocks.
Okay.
But it's fascinating to see what's going on because, listen, let's just use Mike Wilson, okay? He works for Morgan Stanley, who also have Joseph Moore, who are the #1 semiconductor analyst in the world. So Joseph Moore and Joseph Moore and Michael Wilson work together. They're both very senior guys, and they talk to each other a lot. Mike Wilson famously has called the market very badly, but I do respect him, of course. And he's recently flipped himself completely around from being a perma bear to seemingly a perma bull. He's literally saying buy the market's ready to buy now. For a guy who's a perma bear, it's pretty amusing to watch that happen. But the point is this: he wrote this very weird note yesterday saying, the market has pulled back. The market drawdown is sufficient to be attractive to buy. And I don't know whether you used the word but or and. Memory stocks have cooled off nicely. And he wrote that at the time when they're making all-time highs, by the way. So either he hadn't looked at the fact that, because by the way, you could have blinked and missed it. Samsung rallied from 540, SanDisk rather, rallied from 540 up to 740. So $200 in the space of 5 trading days.
What's your thoughts on this one tonight? Because you were attempting to short this.
No, I did short it and I made some money out of it and I covered it. But this is the fire that I'm playing with, right? Now
you're out just now.
No, I have a very small position, but I've got a small short which I'm gonna cover today at some point before the fireworks of Micron tonight.
Yeah.
I'm not, and it'll just be my luck that.
To ring the bell. 5 seconds.
It'll just be my luck that that they get hammered on Micron tonight. But I'm not playing that game. Here we go. Are we going to open up in 3, 2, 1? Ding, 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 ding. That doesn't really sound very great, that bell, does it? Right, so what are we doing here? We're going to look at this market here. I just need to keep a quick little close.
The market has sold off in the last couple of hours, of course, so let's take the look at the losers. It is CoreWeave down 1.5%. American Airlines, of course, big. We have to cover Delta, actually, but all 3 airlines down today, American, Delta, and United. Nike, that's painful. They were at 55.5 this morning. Now trading down 50 basis points. Reminder, that's our biggest position in the portfolio. So trading 54.80. They've certainly bounced off the lows of 54.10 last week. Moderna down 1.7. We've got Meta down, but it's not too volatile today on the open. Procter & Gamble down 1.8 as well. What about the winners? What are the good stocks of the day? It's Intel and Micron. Micron up 1%, 466.
I mean, look at this move. It's so squeezy and grabby in SanDisk. SanDisk is up again in this market, up 3.5%. I mean, it's just extraordinary what's going on. It's not even that cheap anymore. It's on 20 times forward earnings for a really cyclical stock. But we'll see what Micron have got to say tonight. I mean, it's going
to be big for sentiment, isn't it? This Micron number.
Yeah, I think that's what's I think one of the most fascinating things about this situation, because these are not these are not normally stocks that move markets. Micron does not move the market. But if you look at this group, the 4 big memory stocks, they are moving the market, and they are. I mean, listen, it's not just retail. Global professional investors are also struggling to work out what am I long?
Yeah.
What am I long? Am I long gold because it's got no, definitely not right now.
Well, people were starting to buy crypto, but that reversed on that PPI number. If we start to get inflation through the system, right, that's negative for gold. It's negative for crypto as well. Of course, crypto hasn't really been shown too much correlation to inflation recently in the past 4 months, but strategy down 3.5% today, as is Coinbase, as is Riot Blockchain. Novos, where the hell do we sit with Novos? Down 2.5% today.
Yeah, I mean, that hasn't moved in the last hour either. That's just been down all day. I mean, there's not much really to say there, to be honest with you, mate. It is just bobbing around.
Have we given up on Novo?
Well, it depends on what your time frame is, mate. I mean, it's not really bothering me, quite frankly. It's just sitting there in the book. As long as it doesn't make new lows, I'm not really that bothered. But listen, I think we should probably talk about OKLO, if you don't mind. There's a very interesting update that happened yesterday, and they had their earnings report last night.
OKLO.
So OKLO are one of the only 2 listed small modular reactor companies, who of course are very much in focus in the US now, with the Trump administration pushing forward with the green energy independent theme, and the energy and if you look at the stock, look at this market. The stock, I bought this yesterday, by the way, before the numbers. This stock's up 1.5% in a tape that's very dodgy indeed. And listen, what's going on here? These are pre-revenue, pre-earnings, but they got regulatory approval for their big site in Idaho.
High risk, you would say.
They are high risk, of course they are, but they are not a joke by any stretch of the imagination. You've got names like Bank of America out with one of their top energy analysts is a buyer of this stock. They have a deal with Meta. I mean, let's just focus on that, right? Meta have given them 1.5 gigawatts of pre-approved money to build a site for them and build the entire facility for them. Meta aren't throwing their money of that size at people who don't know what they're doing. Yeah. Bearing in mind that this is also Sam Altman's gig, right? Sam Altman used to be on the board. He used to be on the board. He's no longer on the board.
Okay.
This company is the real deal. The only question is, can they convert into? Can they build these small modular reactors and start selling commercially? They got a regulatory license yesterday to sell one of their wholly owned subsidiaries that sells chemicals, nuclear waste chemicals. Complicated, but they can start generating revenue. So they are actually sneaking into revenue, and they have a big deal from Meta. Yeah. It's just look at the stock, right? It's the only thing that's stopping it is this tape, which is very.
So they're not at risk of running out of cash or anything like that, or having to do.
No, $1.8 billion worth of cash on the balance sheet.
Okay.
So they're not in a weak position whatsoever in the cash department.
What kind of? Because of course the ultimate. I had a great chat with Maturin yesterday about position sizing, and of course you are. Could not be loud enough on position sizing. Just remind everybody, when you're talking about stocks like this, what's the most important thing?
I'm just buying back, by the way, a clip of my SanDisk short, taking advantage of this. I like to call it weakness, but it was up 4, now it's up 1.5. Position sizing is so critical, and those of you who are watching for the first time or new to markets, Rich and I talk about what we're doing in our book and my book and all these things. When it comes to a company like OKLO, for example, great example, Plug Power, any of these stocks that we talk about that are high beta, in other words, if the market has a beta of 1, some of these stocks have got a beta of 2.5, maybe even 3, which means they can move 3 times, and quite frankly, they can probably move even more than that. So
that's just the average.
If OKLO moved 20% in a day, I wouldn't blink an eyelid. If Apple moved 20% in a day, it would be the most extraordinary situation ever. So that's probably the best example.
Over 2 days, maybe.
Yeah. But the point being is this: if you've got a company that's got a high beta, it doesn't matter what your conviction level or how much. And this is one of the biggest things that retail traders get wrong. They think they get excited about some stock that's going to be a 5x or a 10x, and they might get one of them right. And they might get all bulled up about it, but over the long term, that is gambling, and you will never ever win. You'll lose, and you'll lose all your money.
And you'll blow your account.
You'll lose everything. So it doesn't matter how much you love a particular small cap, high beta stock. You have to have it. The most it'll ever be in my book, ever, is 5% of the book. and I run quite a high beta trading book. If you ask a portfolio manager who's got, more positions and more money under management, it'll be less than that. But use 5% as your guide. If you've got more than 5% of your capital in a very high beta stock, you've got too much. Yeah. And it doesn't matter what you think about it. It's risk management.
A reminder what we're trying to do with the book here, of course, because we started a book 2 months ago with £100,000 of my own money, not Piers' money, my money. That's why I get to decide what goes in it with his ideas. But it's doing all right, people. It's doing all right. We're up so far 6% in 2 months. So you can see up here we've gone from having 100,000 in the bank to now 100,000 with 6.5 in profit. It was 8,000 in profit earlier this morning. So you can tell that we've got a bit of beta on the upside. But what is sitting in it at the moment? Well, we still got a little bit of Diageo, 11,000 of Diageo.
Yeah, I mean, this is such a painful story, Diageo, isn't it?
It really is. But as I say, I want to build into that.
I told you that I cut half my position in Diageo?
No.
Well, this was a great example in front of my community of just cutting. It does not matter what I think of Diageo. It breached my hard stop loss, and my hard stop loss in my book is 1% of the book. So if my book is 10 million, if any position for any reason breaches 100,000, it has to be
100,000 of a loss.
100,000 loss. It has to be cut.
Yeah, that's good.
I've got a soft stop loss of 10% of the actual position, but then that's nuanced because the position might not be full yet, and blah blah blah. But there is a hard stop loss of 1% of the book, and I breached that. And quite frankly, it's actually turned out to be quite a good stop because it's now lower. But I have to decide whether I cut the rest of this. Listen, it's very painful. I think. Do you know what? I think one of the things the market is punishing Diageo for at the moment, because it's punishing every other stock in the same fashion, is its balance sheet. Diageo have a lot of debt. That we all know that. They during the bull times they ramped up their balance sheet, buying a whole bunch of different brands, and that is biting them in the arse a bit at the moment, quite frankly.
Senior producer Layla and I were chatting earlier, and we were talking about people we'd love to get on the podcast as guests. Now, Dave Lewis would be a great guest, wouldn't he?
He would be one hell of a guest. I've got some questions for him.
Yeah.
I mean, he's got his hands full. I mean, it's so difficult. But you might ask yourself, why do I remain focused on this? And I just want to share with you that some of the smartest people who I know, who I talk to in my professional world, who also have been managing money for a long time. In fact, when I say some of them, all of them, every single one of the guys that I speak to who are managing money and have done so for 20 or 30 years are long Diageo. And the reason why they are is because we can all see the value in this company, but the market is punishing them until we hear something of an improvement for them. I think it'll boil down to the strategy. He wants to broaden the portfolio that they've got. So we'll see how that goes. I wouldn't mind talking about this other subject.
Okay, let's just finish going through the portfolio there then. So we've got Nike. Nike, bigger position, the biggest one in the portfolio, $20,000 worth of that. I've got a stop there at $48. Take profit at 64. Oil, we're actually long a little bit of oil just from this morning, and that's because I've got a 92 put. So that runs out on Friday. I originally thought I bought that because I think oil is going to be lower than 92 on Friday. But the Claude diagram we saw earlier and the escalations today, there is a chance we can see $100 oil again before we get any progress on that, I think. Where else have we made the money? Well, we've made a little bit in Whitbread. Down at the bottom, you can see I initiated a position on Whitbread last week. That's made us about 180. And then we, well, basically, because volatility has come down, then, of course, we're short a lot of vol on the S&P 500. So that is paying nicely, namely in the 7,500 calls that we're short of, and the 5250. No, not that one. Sorry. Where's the other one? That's paying?
I'm just cutting the rest of my Sandisk position because I'm taking advantage of the open volatility And anything could happen to this stock. I mean, it's very memey, it's very spicy, very, very squeezy, and I've got no interest in fighting this fight. So I'll wait and hear what Micron's got to say. Sorry to interrupt you, and then do it tonight.
March expiry is this week, right? So there's a few tiny positions. Well, there's a few positions that we've made all the money on, basically, like NVIDIA 202.5 calls, right? So let's take the profit on that. That's 500. We'll take that one. And then there is the NVIDIA 195 calls. It's not going to get up there, but there's only $12 left in that. And there's $150 left in the 175 puts. We'll take that as well. So you can see that, you know, there's a lot of just trimming of positions that can be done, including Microsoft. Microsoft, buy, sell, or hold?
I just listen. The argument for Microsoft is so strong. I mean, Barron's wrote a massive article about it on the weekend, saying it's never been so cheap in the history of the stock, and I agree with all that. I'm just not that excited about it. I wouldn't mind seeing where their growth is coming from. Microsoft have been growing and dominating for a long, long time, and I just want to know where this growth is going to continue to come from. In the meantime, I'm focused on Salesforce and Oracle, which is where I think the value really lies.
Just getting a breaking headline. Iran is warning that now some Gulf energy assets are legitimate targets after Israel attacked its key gas field. So again, I think it's worth looking at some upside options. I'm going to buy another pound of oil because I don't want it to move before we get options on. So let's look at crude. Let's look at Monday expiry. Potential of this to go over $100 at the weekend. What do you think? $100 oil over the weekend?
It's a long way away from now, the weekend, isn't it? A lot can happen.
Monday, yeah.
A lot can happen between now and then.
Or do we go far out? Do we go up to like 105 and look for some leverage?
Is that what you think, though?
I think that the book will get hurt badly if it happens. Therefore, I want to spend
fair enough.
$600 on protecting that.
Yeah, no, fair enough, mate. I can't argue with that.
Right, so let's buy $2. $2 a point of the 104 calls for Monday. So that just gives us price is no longer valid. So that's $2 a point. We're paying $3 for it, but if we're up at 115, then it's
yeah. No, I think that's sensible, mate. I mean, you've got to, right? You've got to.
Yeah, geez, that's it in 98 already. So, okay, very quick break. We are quarter to the hour, so we'll just take a quick 90 seconds and we'll be back with you. Drop any questions into the chat, and if you want any polls taken as well, producer Phil is ready to pop a poll in. Should we do one on oil?
Sure. I mean, I don't quite sure there is.
All right.
Yeah, sure.
Producer Phil, are you ready to tap in the question on the poll? Let's go. Monday evening oil price. Will it be 115, 105, 95, or 85? What do you think Monday night oil price will be? 115, 105, 95, or 85? There you go. We'll leave you that over the 90-second break. See you shortly.
In a world full of noise and uncertainty, IG is the investment platform that backs you. Forget the dubious tips from that guy down the pub. Get real-time insights, analysis and tools. No more fat cat brokers clawing your gains. Pay zero commission on your investments. Switch to a platform trusted by investors for over 50 years. IG. Trade, invest, progress.
Okay, welcome back, comrades. We are here.
Oh, yeah.
Fellow mealworms.
Don't wind them up, mate. Come on. Important subject to talk about here, fiber optics.
Yeah, we got asked, what about AAOI?
So AAOI, I've really been waiting to talk about this because quite frankly, I find talking about oil and everything else incredibly painful. Right, so the fiber optics space, which is moving and morphing very quickly. Let's just start from the beginning. Jensen won the other day, on top of all the other things he said. In fact, it was the following day after the GTC conference. He said something which got the markets into a bit of a tailspin. First of all, Lumentum and Coherent, we talked about last week on the show, just got a $2 billion investment from NVIDIA, which of course, those guys are fiber optics players. Fiber optics being used throughout the data center, the AI ecosystem, etc. They've become very popular stocks in the retail world, etc., etc. Now, yesterday he made a comment, which of course sometimes these comments get taken out of context, and yesterday was probably a good example of that, because yesterday he said that they are still using copper wires. They're not just switching to fiber optics. There is a bit of a narrative around the market that copper is obsolete and copper's gone. He said yesterday we are still using copper in conjunction with fiber optics. Now, the progression is this: copper. It's like being, at home, you've got a copper wire. Everyone's now got fiber, unless you're in the, countryside.
Scotland.
So copper, fiber optics, and then photonics is the next one. Okay, now photonics is POET and Illuma and these other names.
Explain to me the difference between fiber optic and...
Oh God, I mean, how long have you got? It's quite complicated. I mean, it's fiber optic cables versus photonics, which is using lasers, using light. They're all ultimately using light, using photons as opposed to electrons to transfer data and power from one place to another.
Okay. And it's definitely the future, or it's probably? I
think it is very, very hard to mount an argument that it's not the future, based on everything that's being done. It's like putting. I mean, it's so obvious, it's almost too obvious. It's like, do you want a fiber optic cable in your house, or do you want a copper cable? Do you want a fiber optic cable that does 1,000 megabytes a second, or do you want a copper cable that does 25?
Yeah.
Obviously, we're going to do the latter, and especially when it comes to transferring data around a data center, right? So fiber optic cables, and then photonics is next, but it's a patience game. So he said, we're using copper as well. So all these names that were, AAOI, by the way, is up like 1,000%. It's in a straight line. The stock, they also just issued some stock, diluted shareholders, and did the classic thing. I love these situations. I shorted the stock at 129.
Wow.
The other day. I actually tried to get you to short it, but then you basically just shrugged and said, go away. But then I tried to get a bit cute with this thing because it's a trading stock.
Not like
so
you.
I shorted it and covered it, made about 12%. and then started to buy it back. And then, of course, we got news that we got this Jensen news, and we also got news that but the stock is ripping back today because yesterday at the fiber optics conference in America, all these guys basically said what the market's already thinks, which is that this is the growing bananas. This is growing like wildfire. So they're ripping back. What's really interesting about this stock, though, and bearing in mind, everyone who's listening, this is a very high octane, very high touch, very high beta stock. You have to know exactly what you're doing and be following it very closely. I'm long at the moment. I'm going to probably get out around 100 or something. I don't know, but
again, position size.
Position size is very small for me. So what have I got? I've got $330,000 worth, which is about 3 and a bit percent of the book. It's not big, and it probably won't get any bigger, but it doesn't need to be any bigger because look at it. But what I think is fascinating about this stock, and it's a great example of how this market works, is that this is up 13% on a day when most things are pretty heavy, right? There are pockets. There's lots of trading opportunities in this market.
And this is why you run a portfolio, because you've got stuff like Nike's down today, the airlines are down today. But if you've got one of these that's up 13%, then your portfolio.
Exactly. Listen, my book's all over the shop, but I tell you what, the book has been like a rock. I've got 15 names in it. Today I've probably got 5 or 6 things that I can just right in front of me now. I've got a bunch of stuff that's not working. Aiden's not working. Novo's not working. Diageo's not working, but I've got the shorts on. I cut SanDisk because that's just pissing me off. But net, the book's probably down just a little bit today, with loads of stuff not working, which means that the book is working.
I might short SanDisk now.
It's a great short. You've just got to be a bit careful. I'm so tempted to be short this stock, but the problem is that listen, I'm hoping that tonight Micron absolutely smash it out of the park. Bearing in mind, Micron is now trading above every single price target that the market has.
Yeah. So they have to smash it.
That's where we're at. The risk. Tonight is right. You might get a Micron call tonight.
Yeah.
You love those calls, right?
Oh, that's right. I was in Italy.
Yeah.
And you messaged me and you went short Micron.
Yeah. If only I'd said long Micron, you would have made 150%.
Oh, yeah.
No, but the point being is
no, I did. We made $300.
In terms of trading, we made money. But tonight is going to be the moment for Micron. I hope to God that they don't get collapse, because it will take this with them, and I'm not going to have a position. So I hope that they smash it out of the park. SanDisk trades 800 tonight. Then tomorrow it is mine on the long side.
I reckon Micron down 4%.
Don't. Does that mean SanDisk will be down 8%? And that'll break my heart. But we can't take this risk because it's gambling into earnings, ladies and gentlemen.
Yeah. Let's just look at what's going on here. Gold is down nearly 3%, silver's down 3%, and oil is now above $98.
Gold and silver, we should probably talk about them, shouldn't we?
We should, but let's just finish on vol. Volatility back up 4%. Now, I start to get bullish when this thing goes down through 22. So it was almost there. I was like, so close. But back up 4% today, going into a Fed night, going into Micron night, going into, Iran saying that they are now going to target oil or energy infrastructure. It's not a
although it's not the first time they've said that, but yeah.
Yeah.
No, listen. This is not a market to be getting getting arrogant or bullish or anything, right? You just got to keep it. You've got to have a good book. Like I've got Qualcomm I bought yesterday. It's completely bombed out. They just did a massive buyback. Stock's up 24 basis points today. It's not moving. It's rock solid. PayPal I bought more of. That's rock solid. It's flat today. Illuma's up.
Let me guess what PayPal is. $45.20.
$45.99.
Not far off.
They just had an announcement where they've rolled out a huge stablecoin initiative as well. Listen, it's a rock, this stock. It's unmarket correlated, and it's just sitting there.
Let's have a look at the main stocks. We've got Apple hardly changed. AMD 198, hugging that $200. We've got Palantir 156, not doing anything, and a whole load of nothing on the big names really. It's a wait and see ahead of Fed, isn't it?
There's a lot going on tonight. I'm not going to be taking much risk into it, that's for sure. We've got Micron, which, as we've discussed, is a market-moving event. It's not a market-moving event, actually. It's just a big event for if you're focused in this particular part of tech. But the Fed is definitely going to be interesting. And of course, oil, I mean, it's all of it. Oil's the boss right now. Oil is the boss.
Yeah. My ChatGPT yesterday, I put into ChatGPT, I see Lee's comment there. Thank you, Lee. My mother took her car for a service and they said, right, you need to get the calipers changed, right? So I was like, well, how much is that? 600 quid, something like that. And ChatGPT came back to me and said, if it's over £700, they're taking the piss. Since when did ChatGPT start saying things like they might be taking the piss?
That's a little bit much, isn't it?
Yeah. Didn't expect that at all.
We've got 2 questions here.
Yeah,
they're good questions, and I wouldn't mind answering them. Someone asked about SoFi. SoFi yesterday got a report from Muddy Waters about financial engineering and creative accounting, to put it very mildly, by Anthony Noto and his team. SoFi is a stock I have followed very closely for a very long time. These guys are one of the top neobanks, neobank being online banking companies. Anthony Noto was a managing director at Goldman Sachs. He's the CEO of this company. There's no question that he's very good. There's no question this is a good company. They've got free cash flow. They're quite expensive, even by the metrics of online banks. They became a meme stock and a retail favorite throughout 2025 craze. Which is what. Listen, but the problem is with this company and this stock is that, putting aside Muddy Waters, who, by the way, for those of you who don't know Muddy Waters, they specialize in forensic accounting for Chinese companies, and it's a very fertile hunting ground in China if you want corporate governance problems and a creative accounting or just outright fraud. But when they call S&P 500 companies, not that this is in the S&P actually, when they call US reputable US companies fraudulent, my experience is that they are talking their book, and it fizzles out into a nothing. It
didn't just fizzle. It took about 2 hours to
just ripped back.
Negate the move. Yeah.
Right. So, but this stock has already been hammered. For me, this is a no. This is this may well have a significant relief rally. But I've had so much history with this stock, and I just find it a battleground and too difficult to get my head around. So
yeah.
My answer to this question, especially with Muddy Waters going after it, is just no thanks.
Yeah. Okay.
But they do stand out from the pack in the retail meme stock pack because they are a proper company.
We also want to talk about Nebius for our good friend Jack, that works here. His biggest position. He was very, very happy a couple of days ago.
Yes.
But why was that short-lived?
Well, Nebius are doing what every single high-growth company does, especially the guys who've got loads of capex, borrowing money, and in this case, diluting shareholders as well. So these guys are raising capital in order to pay. Listen, there's the family of stocks that are involved in the same story are Oracle, CoreWeave, Nebius. Mm-hmm. They're all massively capital intensive. They've got huge top line growth. All the OpenAIs and the Googles and the Metas, they're all the hyperscalers. They're all ordering from these guys. But these guys are having to spend a lot of money to fulfill the orders. This is a capital intensive business. This is not software.
Yeah.
This is them essentially, in the case of these guys, building warehouses and buying GPUs that they can rent out to these companies. It costs a lot of money, so it's a battle. And they need. Look at the balance sheet of CoreWeave. It's a mess. Look at the balance sheet of Oracle. It's a mess. Look at the balance sheet of these guys. It's becoming more and more messy. So don't expect this to be linear. And the market does not like balance sheet problems right now. Look at sorry, I'm not going to talk about that.
So somebody who has both Nebius and CoreWeave as quite a large part of their portfolio, and they're already down 25% on them. What would you say? Not that we can give advice, but
I would say listen. I'd say this. I know I follow this company. In fact, do you know what? I kick myself every day because I was this is a classic me. I looked at this company before the gap. Take it back. I looked at it at the beginning of 2025. So where were we trading then?
The beginning of 2025. Yeah.
I read a note from someone that I respect about how this company this was like buying Amazon Web Services before they launched Amazon Web Services. It was a very compelling note, and I spoke to my colleagues on the desk about it. I looked at the balance sheet, and I thought, oh God, I basically just lost interest in it. I put it away over there. And the rest is history. So when I look at this stock, I look at a company that has become very popular, quite crowded to a degree. It's one of the only options you've got in this particular AI capex story. That's on this side of the fence. We all know they've got big support from Nvidia. We've got big support from the hyperscalers, but they're also going to be very choppy. They're expensive. They're very expensive. They've got a dodgy balance sheet. They're going to continue to be very volatile. They've probably got some more capital raising to do. So if you want to own Nebius, just it comes with a health warning. Don't be, if it's down 15% when you wake up in the morning, don't be surprised.
Almost expect it. Right. Well, that is us for the day. Just to close off our poll, where will the oil price be on Monday evening? 34% you say 115. 34% with 33 say 105 and 27% say 95. It's not going down, is what you're telling me. Only 6% of you think that the oil price is going lower. Is the Fed going to ride in and save the day, or is this a nothing done tonight?
I'm not sure whether the Fed can save the day. I think the Fed have got an inflation problem on their hands.
Right.
I think the Fed
are they going to speak about that?
I think Jay Powell is the king of smooth talking. Full stop. He's so good at massaging the narrative. Can he massage this particular narrative? I don't know. I mean, if anyone can do it, he can do it.
Okay. Good. Well, just remember 7 p.m. for the statement and the projections, 7:30 for the press conference. We're going to be all eyes tonight. Get yourself a glass of wine and get in front of that. Where do you watch it? CNBC?
I watch it actually. I've got CNBC is in the main room, and I've got Bloomberg in my office. So probably Bloomberg, to be honest.
But the good news is, yes, we'll be back tomorrow at 1 p.m. We'll be here for the Federal Reserve Review Show, our usual show, 1 hour. Thank you very much for today. Thank you for joining us. Thank you to Piers.
Thanks, Rich. That was a really enjoyable show. Lots going on, and thank you everyone for tuning in.
Good stuff. Peace.